In this video, we're going to go through and try to get ready for the week ahead. This video is not going to be a clickbait one, and I'm hoping that you're going to appreciate what I'm going to do because, yes, this is me right here. My name is Justin. This is me right here. I spent most of the weekend doing stuff that was not related to my normal prep. I was trying to enjoy the weekend, trying to take advantage of the sun, but also trying to build my business. There is a huge push we have committed to giving to our group on Friday. And I take commitments pretty seriously. So as of right now, I'm not prepared at all. Why? I haven't done my work. And there's a reason why. I thought that maybe since I'm doing this at 4:45 on a Monday, and I said, yeah, I'll get it out on Friday. Yeah, I'll get it out on Saturday. Yep, on Sunday. Yep, on Monday. Well, now it's Monday after market close, and the market's been moving. People are probably wondering what to do. But remember, nothing happened to SPY. That's why I didn't feel much urgency. And what I'm really asking myself is, am I doing what I've always done just because that's what I have? That's my routine. Hey, it works for me. I made tons of money. I'm not complaining about it. But this is where you can see I got some dates that are now past due. I got notes that are past due on my S&P 500 notes. Everything's overdone. So you're probably wondering, how do I package up those short videos? They used to be short. They were about 8 to 10 minutes. They started getting longer. Well, that's because I go through all the data. I go through everything. I look at the key economic dates. I look to see what could happen. I derive my notes. I derive my formula. And then from there, I'm able to tell you 2 out of 4, 3 out of 4, 4 out of 4. So what I'm going to attempt to do is to just show you like back in time, like how do I actually build this out? And I'll see how much time I have. If I can actually do this live or I can do it after. But if you are not interested in the normal video, please click off because I am not as prepared. If you come back tomorrow, I'll be more prepared. But like I said, for me, I recognize that the only thing better than a Friday is the Friday of a long week. And that's right. Canadian markets open, but who cares? I don't. I live in Canada and I don't even care. I saw it as an extra day to do work today, and I actually got some really good work done. So here's what's curious. How you felt on Friday versus how we feel today. We're like, yeah, all the way back up, 1.3%. Well, we had an engulfing candle on the weekly when we closed out. So if I would have made a video on Friday, on Saturday, on Sunday before the futures open, I would have said, we're going down to town. And guess what YouTube would have said? You were so silly because the market's up by 1.3. But that doesn't hurt my feelings. That doesn't matter because I would always say the same time every time. Why? Because when you go to a light, we know red, yellow, green. Yellow means the caution. Otherwise, you stop or you go. That's it. That's driving. You know, like, well, it was cautiously bullish, or it was cautiously bearish, or I thought it was green. No, you were just right or wrong. That's it. So technical analysis should leave no room for interpretations. Here's the problem. People have a-holes. Everyone's got one. They're like opinions. Guess what happens? Everyone has one, and most of them stink. So what are you better off doing? Don't smell people's a-holes. Don't listen to their opinions because most of them are wrong. And now I've already told you my opinion. I'm going to continue to tell you my opinion, but I'm doing that because I'm setting the context. Yes, I have an opinion. Yeah, mine might stink, but if it's potpourri instead of something stinky, maybe you can get something from that. So what I'm really trying to do is show you that no, it's not like I'm pretending to be something I'm not. Yeah, sometimes I'm a little bit less prepared. Sometimes I have a little bit more done, but that does not intimidate me. This is where I'll remind you of one more quick thing here because for me, like it's summer. Sell in May and go away like it's May 26th. So, like, do we want to do what Wall Street does? They go to the Hamptons. You know what the Hamptons are? It's beautiful. They're in the sun, they're drinking, they're having fun. Yeah, they're not looking at their stonks, right? They got an algo that trades for them. That's called high frequency trading. They're trading all day. So I would love to be there right now. And that's kind of where I felt the last few days here at business, in the universe, in the omniverse, in all the verses. So what I'm really telling you is that we don't have to look at the screens all day because nothing changed for us if we trade the cash market, which is 9:30 until 4 o'clock, Monday to Friday. unless there's a long weekend. So does anything really change for us technically if we only trade SPY? Nope. If you trade the futures, sure. But does more information mean more value? Not necessarily. All right, 5 minutes in, start shifting gears here. So honestly, don't know how long the video is going to be. I don't even know what I'm making. I just hit record, and here I am. All right, I'll ask you for a favor, because why not? Could you please smash a thumbs up or consider subscribing to the channel? I would really, really appreciate that. So what I'm going to do now is I'm not going to re-record. Sometimes I hit stop. Sometimes I redo it. Sometimes I try to make it better, try to make it more polished, try to make it more professional. I don't care today. I got no F's left to give. It's late in the day. I got more stuff I got to do, including more videos. I got to finish my work, and Friday's coming fast. So I really hope people appreciate what I'm doing today. Not for yourselves, but just the fact that I'm trying. Again, keyword here being I'm trying to show you more of what is the bad stuff. So people always show you what works out well. And over time, like I've been doing this a long time. 6 million views. Thank you so much. This channel here is going back to 2021, but our original channel actually goes back to 2018. Just for time, I've been doing this a long time. I know it's important for me. I think I know what the viewer wants, and I think this type of video is kind of what I would normally do on a stream, to be honest, where I'm just going to wing it. All right, what are we doing? What are we looking at? I'm going to run through that for roughly 3-4 minutes. I will tell you visually what I see, why it's important, and more importantly, why I care or don't. You're going to see me start going faster. So why? I'm just going to start going fast. This is where I would normally go. Let's hide everything. Let's remove our biases, and let's just look at candles. All right, breakout, breakout, fail breakout, inside bar, inside bar rejecting on the 50, bouncing off moving averages. I don't even care what the ticker is. Let's hide it. Why? I want to know whether or not I'm really seeing what I want. And then we're going to come back and put the lines back on and see whether or not what I think is really what I'm pointing to, because this is important. All right, skip. We'll just skip all these ones here. Who cares about the futures? Let's go to BTC. All right. Oh, what's that? 109.358, new all-time highs over the previous high, bullish. ETH over the 50 MA, man, rocketing 42%. Silver inside bar, do you all-time? Is it all-time highs? No, but over the key relative high. When I'm scanning across and I move my cursor, what I'm often looking for is the dotted line. It goes, oops. I'm trying to, again, I'm winging this today. So what I'm looking for is when I hover over here to the current price, what I'm trying to see without drawing a line is it above those previous highs? So just look here. As I hover over that cursor, it goes all the way across. So I know, okay, current low, it's at 31.78, and that 31.78, without me checking over here or drawing any lines, it's over it, because that dotted line's above it. So now we know, okay, moving on. Oil, I'm pointing at that for some reason. Let's hide it because I don't want my biases. I'm trying to see what's there. Oil, yeah, it sucks. Copper, bullish. This is wheat. It's been going sideways a long time. Looks like it wants to go up. Corn, looks like a cup. That looks ready to go. All right, that's my classic setup. Oh boy. Oh yeah. I think I even have a trade on that one. I'm going to be unfiltered today because I honestly I just don't care anymore. There we go. Soybeans, whisper. So that's our system. So what I look for is I'm literally scanning for this. Can I buy it right now? And if I can buy it right now, where can I stop out? All right, let's bring our lines back. There's no line. So what I'm asking myself is, what's the risk versus the reward? And right now, where our system said, let's see what our system said. 1.38, target's 24, stop is 20. Let's work with that because I built the system, so I better trust it. Let's go to, so right here, I'm bouncing around a lot, and I'm going to take a second here to pause. So if you are enjoying the content, please leave me a comment, because I don't normally make videos like this, but maybe this is what people really want. They don't want 8 to 10 minute videos about SPY. This video is going to probably say don't click or something. I don't even know what it's going to be yet. Normally, I know everything before I hit record. Today, I don't know. Here's what I see. I see a big old curl. It's like a J. It's a hook. That's what I look for. I'm making it a line chart for you. It's not for me. I can see it like this, right? Curl up. Curl. That cat bounced to a lower high. Okay. W. Yep. Hit at least the target high. So when I look over here, what I'm asking myself is, what does price say? So I have these cards right here. Maybe before we look at more charts, let's jump through these really fast. Right now, I own only these things. I'll show you what I own. I'll show you full transparency what I own. Here's what I own. I own S&P, Nasdaq. I own Dollar General. I own Constellation Brands, NVO. Oh, I bid on bids on that one. I don't know what happened on that. We'll find out. Google, Rio, BHP, EWZ, Tilray. Lots of bill. You can see it's 82%. I want 80. I got Nvidia, India, and Affirm. I'm down about 0.8 on the year. Let's see how SPY's doing. Pew! Roughly tracking it. So 0.9, I'm at 0.8. Oh, but Justin, didn't you see the gap up? Yes, I did. It's 1%, 1.3. I don't care. So as of Friday's close, I'm beating it. I'm underinvested though. I don't really want to have this much cash, but it's only $5,000 account too. Like it's not that big. My purpose of this account is to make sure that I understand the cycles of trades because these are all stocks that I fired for better or for worse. Oklo, crush. Tesla, crush. Baba, wish I had more. Crush trade, it was 40+%, but I didn't make enough. Oklo was probably my best one. And again, didn't have enough. I bought some and it ran away. So I always wish I had more, but that's a good thing. It's kind of like the Baba here. And also kind of like my current positions where like this is, they're not big positions at all. $13, $15, but it's completely free. So as I go through here for these existing positions, I'm asking myself, if I already own it and I look at the chart, what should I tell other people to do? Because if someone came onto the stream or a video and said, hey, I own VOO, I've de-risked it to the point where I basically have a free trade, $10 paid out of 13, $16 paid out of 15. That's a free trade. That one's mostly funded. So how am I going to mess this up? If I buy more, because I have no regret of either one right now. It's working for free. If when it's funded, normally I would not click off number 2. In this case here, I would probably click off number 2 because you can see I've trimmed it a lot of times too. I've trimmed it 1, 2 times, 1, 2 times. I'm like, India, I know I trimmed it so many times. 1, 2, 3, 4, 5. So the benefit here is like $25 in profit, realized, real profit, versus a $14 position. I cannot reduce it lower than 0.25. Otherwise, I should just not own it. It should just get closed out. So what I'm really asking myself here is that if I scaled it more appropriately, let's go to Slack. Let's look at it here. Because normally I would just look at my notes and again, I'm winging it. Here's what I said going into this video. Market's closed. I'll get this out by noon tomorrow. Fucked up, right? Might as well hide it now. Let me go hide it. Never happened. You're watching it, so you know I'm just joking. All right, so +2, +13, +30. Got some fills. SDZ filled. Update on the communities coming on Friday. Lots on the go. Oh boy. Oof. Okay, Spark update, HMR. There's some links. Channel ping. There we go. That's the Algo account as of last update. How am I doing here? Hey, not bad. We were up how much? Okay, we'll check on that after. Here was the portfolio. I had some bids in. So all the stocks I showed you last Monday, I bought those. They're real now. If it's not green, bids are filled. They're real positions now. Rio, BHP, EWZ, those are live. Those are open. Are they big? Nope. 1%. All right. I explain all my trades too. So when I look at Rio here, here's my idea for it. Again, I'm showing you a lot more today because if you clicked on whatever I decided today's video to be and you're still watching, here's the raw stuff. Here's BHP, here's Rio, here's my idea. I'm thinking of buying it. I have a bid in like I showed you. Then it filled. Am I green? Flat and up 1%. But what happened is that, just bit my tongue. What happened is that we actually got alerts on these. So I said, hey, I'm watching these, right? They're due. They're going to pop off here. Oh, yeah, I'm ready. I'm looking at the price to earnings. So S&Ps are roughly 24. That's at 10. So today it's worth about 9 PE, price to earnings. So if pretend the company wanted to repay, its market cap is 78 billion. This is, which company is this? I don't even know. Probably BHP, or this is Rio Tinto. It would take 8 years for the company to repay every share And again, like potentially go private. Think of it like that. So it's a public company. It wants to buy all the owners out. It would take 9 years to buy them out because the price to earnings says 9. Price to earnings are an annual number. So 9 years to pay us back now, 10 years to pay us back later. S&P is over 20, so we're getting half price. If we like the company, hey, I like 50% off, especially when the chart looks like it wants to go up. Then we look over here. What are we going to get paid to wait? There's an estimate that's trailing 12 months. So that's TTM, which means that we're going to get paid 6 to 6.5% just to hold on to the shares when it's already cheap. And when companies pay dividends, generally speaking, that means that they are safe because dividends are excess earnings that they don't know what to do better with, right? We don't have a better way to reinvest this, so we'll just give it back to you. Or for value stocks, it's a way to entice you to hold on. If we look here to, so I said one is UK and Australia based, so we're looking at trade deals. That's already baked into my formula. You would not know that unless you're part of my group. And right now, you can join our waitlist, but you can't join. So it doesn't really matter what I tell you today. Nope. Because even if you want to sign up, I'm not selling you anything. I'm telling you, I don't want your money. So free value today, as good as possible. And if we go here to, did I move it? I probably moved it. So we had those trade deal topics, and we probably have it in here. Trade deals, where are we? Oh, there we go, right at the top. So we already know UK was the first one. We're roughly here. Australia, Trump's been talking a lot about Australia. They have a surplus. We'll probably spend that as a win. So, all right, line them up. That's why I like it. Mining. What do you need for mining? Everything. It's the raw inputs. You want to make anything, you need materials. So that's why I like Rio, and that's why I like this one. I like Vale too, but I don't know. I'm not sure about Brazil. I'd rather just buy the basket or the ETF because I don't know the individual winners. I don't know. EWZ currently pays 7% dividend, fat. Anyways, going back to here, what that basically shows you is that these companies are cheap. I'm going through ideas. So as I'm going through, I'm like, okay, well, here's what I see. And now I'm starting to notice that I'm bouncing around a lot. So, making a judgment call right now. Do I stop? Do I re-record? Do I keep pushing through? Hmm. 17 minutes. Are people going to watch 17 minutes? Whatever. I'm just going to push forward because if I have to re-record, I'm going to have to re-explain all this stuff anyway because I'm not prepared. So right now I'm between 0 and 50. I want to buy more, but I'm not going to make that plan right now. Normally what I like to do is this. So normally I like to go through all these charts like I talked about. I'm way too deep into this video at 18 minutes. I used to make him an hour, but now I'm like, people's attention span is not high. So normally what I would do is go through this one. It's already an idea. I've already done it. What I saw in the algo is the same thing I want to buy. I go through this chart. I paused instantly. Why? Man, I love that curl. Where could I sell? Right there, right there, right there. Those are targets. Where am I wrong? Right here. So I'm risking this much to make this much, or this much. When I look at SPY, I'm not excited. I'm not excited when I look at these charts here as much. I'm like, I got to see another candle. That's just how my brain thinks. It got rejected there. I don't like that. Yes, it's over the high. Yes, it's bullish. Is it bullish enough for me to want to buy it? No. It doesn't meet my criteria because I'm like, well, if I'm wrong, I got to hold on all the way down to here. I don't want to buy there and hold on till there. That's mentally torturous. I like buying and it goes up. So I generally will buy like the S&P, like the NASDAQ at opportunistic times, which basically means I see this. If I don't see this, man, it's time to sell in May and go away. It's time to go to the Hamptons. It's not time to be overthinking. Dry liquidity, not best ideas. I defer to my system. My algorithm looks for ideas, and I am very, very excited about what's going to come. More on that after, though. I'm not going to have a chance to go through each one of these. So what I'm going to focus on is what's most important. What's most important right now is me going through and getting caught up for the week. So for me to feel like I'm properly caught up, honestly, all I need to do is just look at this chart. Look at this one here. I personally do not need these notes, but I'm hoping that when I come back tomorrow, like tomorrow morning, or I will do it live on the stream, depending on the feedback and how much I actually get done. Maybe I will do this live tomorrow. I don't want to do it right now. If I was to guess, looking at the S&P weekly, this is what the number would be, though. On the daily, as of Friday's close, bearish, close below the low. There's no emotion. It's just what it tells me. Second week, yeah, close below, pause, but it actually printed another low. So I'm looking right here, 581. I got 581.82. So 581.82, 581.41. So I know it actually printed a lower low, but because it's green, it will not been able to close below, right? Because it's green. So now I know 3 out of 4 was the way we were on Friday. I started doing this one here, then I stopped. It's 4 out of 4. You're like, well, it's 4 out of 4. Didn't you see the foots? Trust me, I saw them, but I look at candle closes. So what does that mean? Man, full bear. As of Friday. Today is not Friday. Today is a different day. So what are you telling me? Right. I wish I knew. Everyone on YouTube, they already know what they want to hear. They don't really want to hear from me. Can I hide the sidebar? It's really annoying on this most recent update. It's taking up half my room. Anyways, candle's not closed out. Let's do the weekly really fast here. Why? Because you're watching. You want the info now. I will massage this into tomorrow if I need to, which means the context. But usually 1 to 2 lines should be all we need. The candles don't tell us how they feel. They just tell us how they're closed. This one's going to have to wait all the way until Friday. Oh, Friday's going to be a weekly and monthly close. I think I have that noted in my notes below. Did not see that. There's new made in China. They're going to be reviving it. I'm not even going to talk about any news today. Why? That stuff just doesn't matter. NVIDIA earnings is what matters. The 28th. So is this going to happen? Oh, that's this week. Oh, I forgot about that. Port shutting down, right? That was the worry about the tariffs. This is the port manager of LA. He talked to us 3 weeks ago. There's now been a reprieve. Same thing as what's happening with the EU getting pushed to July 9th. Why? Because it's after July 4th. Those Americans want those big fireworks and those big burgers. They want to celebrate America. So kick the US after July 4th. That's the way I read it. That's done. This has not happened. We'll remove it. I'm expecting this anytime. Why? Because I was told to expect it anytime. This is now overdue. So I'm not sure if that's going to happen now. We'll just check it off. This one, I'm pretty confident it's coming. We'll move that up to here. That's where the notes will come for this week. We already looked briefly at the calendar. What matters? This one and this one. Oh, this one too. Oh. This was a speech at Princeton, I believe, or Yale. I think it was Yale, actually. Or Princeton. I don't even know. I forget. It was just a speech. That is done. Sorry, I'll put a check mark. Not bad. Good. Done. What matters? This one. I don't think that's a preliminary print. I'll double check. I don't want to check it. This one here matters. That's already given it to us. So that's going to be an increase, but 0.1 is pretty low. Run holiday right now. So there you go. That's what you would normally see. And these are the dates that'll be in the calendar for after. PMI matters, but it's at the same time as this. Actually, that's after market open. We'll check that one. All right, close it out. None of this stuff matters. We'll just close it. In here, I don't have to humble brag anymore. My account's just fine. What do I own? Oh, aren't you going to get smoked on Monday? Yeah, but they're free trade. So if they gap up and we're not, let's just have a look. So yeah, like we're higher than we were here, but SH is not going to get blown out. Why? That's the gap all the way down. It's only giving back 1 day of the gains, and we didn't stop out before. So the low here is 41.4. 41.25. I got a free trade. I literally cannot lose. So, oh my God, you're going to get profit back? Yeah, I'll give profit back. I still think the market's overbought. And I'll show you why. If I go to here, radar, this is why I'm still bearish. I'm like, okay, bulls are going to celebrate. What's the point of making a bearish video? What's the point? That might be a glitch. I'll have to check that after. We were due for SH and PSQ. So if we're not due, that is very notable. There's nothing on here. So 17, that seems wrong. There's a holiday, so we might have a glitch. Going back to here, as of right now, what are the dates that matter that could really drive the market market up or down? It's not tomorrow, so I'll be ready for Wednesday. Wednesday, I already know. That's midweek. And then Wednesday into Friday. So potentially, Last meeting, did Jerome Powell really speak for the board? If there was dissent, we'll find out about that on Wednesday here. I think there were dissents. It's just a feeling. So what do? Nothing. It's just a feeling. Be mindful of Wednesday. That's what it's telling me. High volatility, FOMC. And then we get literally the two things that the Fed cares about. We get GDP, which is growth, which is showing negative for the first quarter. If it's a preliminary print, that matters. And then inflation's at 2.6. So 2.6, 0. What is that? Low growth, high inflation. That's called stagflation. That's bad. I've talked about that before. Not going to talk about it now. This is likely going to happen. I don't know if Trump's going anymore. This was from March. NVIDIA earnings are happening. I believe that's on Wednesday. That's on Wednesday. So Wednesday, we get the Fed meeting minutes. And we also get, so here's what I'm unsure about. I'll tell you full disclosure what I think about before I hit record. Because I'm trying to think about, I record on the weekend, but is that video going to have longevity all the way until Friday? Because I know at what point this is going to break. And I forgot to do this one here. So it's going to be 2 out of 4 bull. 2 out of 4. When I make my video on Friday, the technicals are not going to change until we get another candle. But hey, people like warnings. They want to get warned first. No, 1 out of 4 bear. Why? Printed the lower low, did not close below. So I talked about these ones here. Let's do this really fast. What I'm doing right now is going through my bull and bear recipe. I'm thinking about, again, I know my recipe. I'm looking for this right here. After a trend change or 4 out of 4 bear, let's look here. Why? Because we're bullish. After a trend change or 4 out of 4 bear, higher highs, then higher lows are sufficient to defend. Okay, what does that mean? Then higher lows is all we need. We only got one lower low. So on the S&P weekly chart, this is what I do in my head. I don't have to look at the checklist. Higher low, higher low, higher low, higher low, lower low, didn't close below. So what happened? Thus, we're 1 out of 4 bear. So then when I go back to here, I would type in, where are we here? I'm like, oh my God, you're bearish. Didn't you see the futes? So 1 out of 4 bear. Are we still 3 out of 4 bull? Well, that's where we have to make a judgment call. So let's look at the lines. It's an engulfing candle. We're right around the low. So technically, if I'm not taking my feelings into account, it's bearish. It's if it closed a point below 577, 2 more points below, that's bearish engulfing candle. I'm going to go to 1 out of 4 bear. So I'm going to go here to cautiously bearish, because until we get 4 out of 4, we're cautious. Let's go red. And let's put a yellow circle first. Let's just delete that extra colon. There we go. So we're going to be cautiously bearish, 1 out of 4. So 1 times the lower low. Didn't close below, right? Watch 50 MA, watch gap. That's what I would have said on Friday. What's the point in being bearish? You guys would have just made fun of me. Rather just enjoy the weekend, enjoy my sell in May and go away, right? Enjoy my time, reclaiming my time. But we're above the beach ball area. So the fuck what? The charts don't care about my lines. They only care about candle closes. There's only 4 data points on anything. There's the candle open. So right here, the only numbers we give are the only numbers that matter. They tell us the open, the close, the high and the low, and the volume. That's all I care about. I draw patterns to identify the trend or what I expect to happen. It's a forecast, like a weatherman. Daily, that didn't change. That's crossed out. We're full bear. I already know I'm going to get made fun on Monday. I already know it. What's the point of me even trying to explain it? So that'll happen on Tuesday. We'll get another candle close. I'm going to say it's bullish again. I'm going to flip. And then on the 30th, bearish until proven otherwise, right? We're going to have to go all the way back up. So when I look here, I'm going ES. I'm looking at the overnight move. Cool. We're almost back to where we opened up last week. We're 2/3 of the way there. Well, if you're bullish last week and then you got swamped out on Friday, you should be more bullish now. Levels are done. Key dates already matter. I showed you right here. So it's NVIDIA on Wednesday. I don't even care about other earnings. Earnings season's done. It's only NVIDIA. And I'm guessing there's going to be some good orders. Why? I'm torn on AI right now. I don't know. Like this inflation, stagflation versus the growth and optimization. And they call those productivity gains. AI is really helping me personally right now. Because like as an example for here, I'll show you a live example. So I'm not going to show you what our sprint looks like, but on here, we would like to have a dark and light mode where you can click here, you can go, hey, light mode. That would have taken 3 weeks from Kevin to go through page by page to properly parse it, to make sure everything looks good, so you get a proper experience. On mobile, because our website is responsive, we don't have an app, it's responsive. And yes, it's not great on mobile, but it's responsive. That would take him 3 weeks worth of work. So we have so many things in our pipeline. And yes, our system's not perfect. If you go here, it doesn't say when it manually exited. Why? Because we're a team of 2 trying to build a product that has been ongoing for literally years. And we have competing priorities. So should we build a light and dark mode, or should we launch our product? Should I make a video on Friday, Saturday, Sunday, or launch the product? Let's launch the product. That's what I'm focused on. The takeaway here is that we're now using Gemini, which is from Google. And that's part of the reason why I bought it. I like Gemini. I like Waymo. I like Google. I want to buy more. Why? I'm using it. I like it. Kevin told me that he's already done it. We have it in a push ready to go. It's in one of our sprints. 30 minutes. I might be recalling wrong. Maybe he said it's 1 week worth of work, maybe 2 or 3, but 30 minutes of him co-piloting with this AI that cost us nothing. Google wants to earn back the business they're losing to ChatGPT, and they're open, so I trust them. So 30 minutes on a local instance on our environment, or local, which just means secure, 30 minutes. We're going to launch a feature we would not have otherwise, and Kevin tested that because there's no security risk, and now we can look at more challenging issues, more challenging topics, like everything on our platform. I think 2 million lines of code. So even a 1% error rate getting improved or not improved, that is thousands of bugs. That is our core issue right now. We're squashing bugs instead of building features. So we're having a hard time breaking above the beach ball. We keep falling over, and we're just tired of it. We want to get out. So 30 minutes versus a week, 2 or 3. And if we can apply that to more things, even better. Wow, really? It's really that good. So anyways, we got through the TA. We now got through here. This is what I do in my head too. I'm looking at bullish, kangaroo, bearish, golden, death. I'm looking at the bull recipe, the bear, and then I decide what I want to buy. I don't do that all in 1 second. Oh, buy, caterpillar, buy. Nope. I go top down. So I might have jumped over that. Top down to me means like a pyramid. It's a hierarchy of decision making. Before I decide to buy individual stonks, like over here for Google, Nvidia, I own both of those, or like Tesla, don't own it, or name I'm looking at, I want to know what the market's doing, because BS rolls down, money rolls up. If the S&P is having a hard time, it's going to drag everything. If this stock's doing good like Nvidia, it could pump the market up. But if the S&P is weak, it's going to drag down. So if I don't like what the S&P does, and we just turned bearish engulfing, I doesn't matter. I'm not excited to buy. I'd rather just pause. And that's because my goals are not the same as yours. I know the goals from my account. So should I wait, buy, or sell? I'm looking at item number 2 right now. We only got 4. There's only 4 best practices. No. As a rule of thumb, it's that one. Unless it's free, like I said at the outset. Generally speaking, I'm a sore loser. I don't like losing. So I avoid my ability to lose. Cool. All right, how to make a plan. Expect you're going to buy, it's going to go straight up. What if you're wrong, though? Think about the worst case scenario. So you're less surprised. And as you get more and more seasoned, or more and more experienced, you will be surprised less and less and less. I still get surprised, but I'm surprised less. Like they move up overnight. Yeah, why would he be all bearish on Friday only to pump it up on the weekend? Because it's a very low cost, high return. People's mental state is like, oh my God, America back. What did it cost? 130,000 contracts, nothing. He said like 3 or 4 bearish things on Friday, boop, and then all the way back up. It's not a coincidence. And in this Trump market, you have to know what you're trading. So I know what I'm trading. I don't have to tell you what I'm doing. I know what I'm doing. If you don't know where to start, it means you have too much plan and too much going on. I keep it simple. I'm a simple guy. Keep it simple, stupid. So I have my plans. I'm not going to do anything, but I still assume this, even if I'm wrong, because I don't want to be surprised. All right, moving on. Last one. Should take 10 seconds. As I was going through there, as you can know, like it doesn't take a long time. If I go here to the important charts, I'll go back to the ETFs. Let's quickly look at the mags and the ETFs. We're not looking at any lines. We're just purely looking at the candles. Bullish, but head and shoulders ish. Bullish, but a huge gap. I'm not sure what's going on there. Sloppy W. Let's hide. Forgot to hide. Looks like a head and shoulders to me. So that's the neckline right there. Lots of wicks. So sometimes it's easier to smooth it out. That's a pretty clear head and shoulders there. Yeah, but it's invalidating right now. But candle's not closed. So that's what I see. I see the head and shoulders. I just see one candle that's not closed. Apple racing down to support. So bounce off the 50 and then to a lower high and rejecting. Above the previous all-time high. Unsure about what's going to happen here. Google bounced off the all-time high. Has to reclaim this area. So as you can see, I'm pointing to here, but like, yeah, we got to get above there. So this is my accumulation pocket for Google right here. I like it in this area, potentially down to here. That's probably what I would say in my levels. Probably down to here. So I have time to carve out a bottom and buy to get up. Why? I can buy it up here. I can buy to new all-time highs. I got tons of time. Wants to go to $1 million. It's got to make it 200. Has to make it at $200 first. Meta bounced off the previous all-time high, or what used to be resistance, is acting as support. That's obvious. It's nicely new all-time highs. I'm not sure what that means. I'm just noticing all the real bodies right here. So I'm noticing that real body, that real body. The real body is just the open and close. The real body's right here. Real body's right here. Real body right there. Real body right here. Real body right there. Real body right here. It just means resistance to me. Doesn't mean I'm right. It's just what I look at. I also know that the people are bullish, right? Buying, 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 buying. Looks good. There's no reason to be bearish, but would I buy this? No, not right now. Bullish, but there's a long stop down there to know we're wrong. If that gap fills, I'm going to be really regretting buying it here. Another way of looking at the S&P. Let's jump down to ETFs just really fast, just because I need to do this anyway. S&P, NASDAQ, that's the Dow, that's mid caps, the Russell, failed break, CAF, failed break. That's just a different way of looking at the Russell. Those are called the cash cows of the Russell. New York Stock Exchange, failed break, XLK breakout, XLV breakdown, XLI breakout, new all-time highs it looks like, or right near it. Let's check. 14451, 14411, 46, double top. Failed break, breakout, bounce on the 50 MA, new all-time highs last month, inside bar right now, bullish. Look at all that accumulation. Wow. Needs to go to new all-time highs. So looking at gold versus GDX, the gold miners, this is gold, right? Clearly broken out right here. Perfect cup and handle. Oops. Perfect. Classic. So you're like, oh, you buy Google over here in accumulation period? Yep. And then I would buy more on higher lows up into here. That's the breakout. That's the part of the move that I like. I like buying it in here when it's curling and like holding it all the way to the higher high and let it extend. That's a runner. Has work to do. I has to get all the way up to here. Has to digest that high, this high, that one. Lots of work to do. Silver looks the same. So this is here's where the data. This is 2 decades. That's a long time. This looks like a cup and handle to me. And a cup and handle inside a cup and handle. Try and talk a little bit faster because it's already at 38 minutes now. Double E here for silver. Let's move on a little bit faster. Regional banks, failed breakout, stomped, breakout, water, breakout, uranium. Oh, Trump news. I sold my CCO on Friday. That's Cameco. If I bring my lines back here to hide, yeah. I'm actually happy I sold. I probably even looked at that. Failed breakout, red. That's biotech. This is basically ARC by Goldman Sachs. So the good ARC. There's your bad ARC. It's lower. It's underperformed, but wants to go up on the 50 MA. I can see the dotted line, which is bounced above the previous high. So if I bring my lines back, it should show. There we go. I can see it's above a pivot. So head and shoulders, but it's above it. So I'm not going to argue with the chart. It's just not ready for me to buy it. But I had it on my 401k list. Oh, look at Germany. Oh, it's the Germans. They go buy. Yeah, they go mega up. Canada, new all-time highs. I talked about that. That's Canada. Emerging markets breaking out. FXI above the previous high. That's a breakout. India above the previous high. Look at that volume too. That looks great. Right? It's yeah. I even have it noted there. Looks great. I would buy it here or wait to watch the reaction. That's why I trimmed India 4 or 5 times. I just perfectly bought it there and I trimmed it up into here. I'm sure I trimmed it into that previous high right here. So buy it here, trim it there, and then buy it back if you need to, or just let it run. Mexico, IHS, really bullish on that curl there. Or Algo called it too. EWZ, that's the one I just bought. That's Brazil, above the previous high, up by 2%. That's the money supply. That's the unemployment rate. That's the 2 versus 10 yield curve. That's called the 2s 10s. It just means how much. I'm not even going to talk about it. It's complicated. US 2-year note. Wow, almost a 4. 4.5. That's the 30-year note. It's usually used for mortgages. That's at 5.0. That's pretty high. TLT dumps. Skip. I think that's all that matters. There we go. All right, so charts are done. I know what I need. What I would normally do, again, off camera, is this too. I would go through the weeklies and then just go through, look at each one by one, and then see whether or not as I come back, oh, do I agree with my preconceived notions or my lines? Because if I don't, I should probably update them. It doesn't help me if I'm looking at things just because I said, oh, well, this should happen, or oh, head and shoulders, but we'll just hide it. We'll pretend it didn't happen. We'll start from scratch. It's a lower high now. I don't like to do that. I don't like to move the goalposts. I like to know what my dominant pattern is, and then whether or not I am actually respecting what I would look at if it was naked charting. Oh, okay. All right, so we talked about that one. Visually, what we're looking at, that's all the notes. Topics, we'll talk about those tomorrow. My show schedule. I'm going to have to do all this tomorrow. I don't want to do it today. Why? I just don't want to. So we got to get rid of, oh, you said you were bullish. Oh, change my mind. Why? Because the market closed another candle. I'm not telling you what I think. I'm telling you what the market thinks. This is what I think. If SPY can make new all-time highs, watch what E, WC, and DAX did. Reminder of the 3-month bearish engulfing candle. I know what that means. Do you? That's one line. It's 2 sentences, barely 2. I know what that means. Watch for the S&P to go new all-time highs, or something's wrong. So no, I'm not surprised we're going up. I don't want to buy it. All right. Do I really have anything else to say here? I think the future market's about to close right now, if it's not already closed. Yeah, it's closed. So it closed early today because it's a holiday. We don't have anything to do. So if we look at the S&P on the daily, weekly, or monthly, here's what I'm actually going to do. It's already 43 minutes. I'm going to spend a few more quick minutes just in my own head flipping through and seeing whether or not what I already have drawn on the key charts, which are S&P, QQQ, are already accurate. Bull bear, that seems important. We're bouncing off of here. So ES is going to be probably around the 70% retracement at 585 if I was to guess. Starts pretty bare. Why? So I modified this one here. So if you're wondering why this one's weird, it's because I just went into here and then I hid the 100 and 0. Because when we're bouncing around this area, I wanted to use my lines. So normally it would show the 100. If I go to like S&P, it should show the 1 and the 0. On this one here, it doesn't intentionally. I modified that. So that's why I was wondering what that line there meant. Is this still helpful? Let's just do it again. Let's just start over. Let's see if we actually know what we're doing. Here we go. Fibonacci. Let's go Fibonacci. Magnet. Let's go from our high down to our low. So now I want that 100% in there. And this should match this chart. So 408, 504.16, 504.16, 408. Got it. All right, now we zoom in. Bounced off the previous top. We got that right there. Why? It's the 0. It's the 100%. Sorry, 100% here. 1.0. So I already know. Bounced off the blue line. That's my 100% retracement. Death cross, but going to make a golden cross later. So if I extrapolate what the SMA should do, this is probably not going to move. I'll probably meet somewhere there. So if we go up and then slam back down to what? Oh, fill the gap. That's the first thing I think about. Where would I want to buy? Where am I wrong? Well, We're the 200 above the 50, so I don't particularly like that. Also bounced off the previous high here. That's fine. This is my first thought. And this doesn't look at any of my existing notes. I'm looking at this area right here. Over the blue line, good. Where can we go? Back up to the high. That should be the 161 too. Yep. That's our Fibonacci extension. So what happened? Man, perfectly respected. Perfectly respected. Is it going to be respected? If it is, we're not going to fill these gaps here. It's not going to happen. So that's our new, the lines have been moved up like football. If we defend this area, we're not going to go back down. We got 1, 2, 3, 4, 5, 6 steps of support. It would have to tank now. So that Trump scare, it might have been the bottom. So if what I'm looking at here is like, is there really urgency? No, I don't see urgency. Urgency to me looks like this. All right. Lots of people are trading. Why are they trading? They're feeling emotional, excited, fearful. Doesn't matter. Here's what I see. This is going to have to increase, or we're going to make steady progress towards the high, or we're going to go nowhere. We don't have new all-time highs. What do we got to do? We got to grind it out. We got to do this, like the note says. Got to do this, like the note says, or we're going to do this. So what do we do? Nothing. There's nothing to do. Do lines really help us on here? I don't know. Cool. We can draw a line. Make us feel good. Is it helpful? It's not really helpful for me. Why? 1 touch, 2 touches. 2 touches are not significant. It does mean that we're trending above the trend line, but I don't really need that. I care about this. I care about a horizontal line, not an uptrend. I care about this. It's a barrier. Above it, good. Below it, bad. If I go here, it invalidated it. I'm not going to argue with it. It's still my dominant chart. I've also noted it's above it. This is wrong now. If the candle closes, I'll revise it. As of now, it doesn't matter. Now let's go to SPY. So what I'm trying to show here is, so I'm doubling up here to be auto. You can go right click, you can automate it, or you can double click right here. So when I go like this, or make it big or small, if you double click, it auto sizes it. So now I know if I zoom in or out, it's going to automatically scale it. It'll include all the data for better or for worse, but these things are all messed up, which means when I am looking at my chart, I have to do this to understand what my lines mean. Here we go. So now I'm noting that there's a downtrend here, right? Downtrend in volume, and the volume is now elevated here. Tons of failed breakouts for me. This doesn't change. There's nothing to do. Rover resistance, I know what that means. This right here is all I need. Everything's visible. That's my update. Weekly, yeah, we have a dominant pattern. I've highlighted that we have broken out, so I'm now going to delete that. I was probably noting the engulfing candle. There's a gap. That's natural support. If we fill the gap, it's right around the 50. So now what I would do is this. If we fill the gap and we bounce and close above it, that'll be a lower wick. What would that mean? Failed breakdown. 1 out of 4 bear, and then right back up. If the gap remains, it's not bad. It's not that it's good. It's that I just don't know if it's support. Hasn't been tested. So if it doesn't get tested, we just don't know. On the daily, we stop going up. We can revise it. Because is the line still helpful? I don't know. So 1, 2, 3 on the real body, 4 on the real body, 5, 6, 7, 8, 9 touches. It was helpful. Is it still helpful? Now we only have 3 touches, right? It's not touching that body there. So 1, 2, 3. No, it's not significant. We're still technically in a bull market, so that's 20% off the low. The market generally counts 20% on closing basis. So for me, it's 20% off the low. Trump did it. He killed the Biden bull. Sorry, yeah, Biden bull's dead, and he's birthed his own bull. If it holds above here, it's bullish. Nothing else to do. Volume sucks. I know there's this other chart that I was looking at here. The other thing I would note is that, yes, I know we're stuck in the period where we don't have all-time highs, and everyone's like, oh my God, what are you going to do? Well, I'm going to do the same thing as mentioned when I looked at my chart, 0 to 50. Until what? Until we get above here. This is a consolidation area. It's yellow light. Be cautious in here, because if we don't form a higher high, that's false hope. That's a trap, right? That's the complacency. And I've fallen down that hole so many times, I am not going to do it again. Last one's here. We got US 10-year note. This is the one that scares me, to be honest. Still above that area. We're breaking out, moving higher. We're not rolling over, forming lower lows. That's what I wanted to see. That's how I know that stocks are likely going to go up. This tells me stagflation. This tells me we're in a breakout above a pivot. I have gold up here now because I think it's the new reserve currency. That's why I put it up here. We'll skip it for today. Dollar. Don't care about the daily. Showing something here, but I forget what that means. Oh yeah, we had an alert on it. It's failing here though, right? Rejected. So it's breaking down. The cup and handle is actually breaking. The US dollar is weakening, which is normally not what happens. It doesn't normally move with the 10-year note. It doesn't normally go down and 10-year note goes up. That's not normal. 20? Who cares? It's at 20. Yeah, it's like whatever. 20 means low. I don't know if 22 means the close on Friday. Must mean, yeah, 20 is the close on Friday. 9:30. I'll have to wait and see. I think that one's closed. So that's it. That's the video. 50 minutes, 51 minutes. And what I also told you is that on the pyramid here. So now I know the S&P, I'm not getting the signals I want. Different accounts for different purposes. But going into this week, I will make my best effort to try to do this live tomorrow. I have to go through and do my notes, my charts, my portfolio review, my audience review. If you want a prize, make sure to go claim it. And I think that's it. So thank you for tuning in. I'll see you tomorrow or on the next video. Thanks so much.